Apply.
This is the Real Estate Zone on KLBJ with John McClellan and Kevin Bown. Call them with your questions at 836-0590 or 877-590-KLBJ.
Lights go out and I can't be saved. Tides that I tried to swim against put me down.
And good afternoon, Central Texas. This is the Real Estate Zone, our weekly radio show about Central Texas real estate. It's about making money, not losing money. It's about being educated. The phone number's here, 512-836-0590. That's 512-836-0590, or toll free, 877-590-5525. That's KLBJ. Give us comments, give us a call, and we'll drive the show in the direction you want us to drive it in. We love to talk about different areas around town, be it a zip code, an MLS area, bedroom community. Give us a call at 836-0590. We'll tell you what's happened in the past, what's happening right now, and better yet, we're going to give you our predictions for the future. Don't forget about our website at www.austinrealestatedaily.com. That's Austin Real Estate Daily, because real estate does happen on a
daily basis.
Thank you, Kevin. As always, joined by my co-host, Mr. Kevin Bown. Kevin is a licensed real estate broker, an Austin native, multi-generational. Kevin, what the heck's going on?
Hey, John, my favorite mortgage banker. It's hazy out there today. It's not raining.
It's not raining.
It's a perfect day for AM
Got the
radio.
rot rally going on.
When the weather's like this, we bounce all the way to the coast. This radio station
Coast
has
to coast.
one of the broadest reaches in all of Texas. So
Coast of Travis to the coast of Padre, right?
Yes, in Texas. As you mentioned, we're a call-in show. This is a real estate and mortgage show. We are two local experts. During the week, we actually work with clients. And for this hour, every week on Saturdays from 3 to 4, we're here to answer your questions, hear your input, talk about what you want to talk about. It's a way for us to refresh, become energized, right, with what we do on a weekly basis, and sort of share our feet on the street knowledge. Much of real estate reporting and mortgage reporting is many times 30 days, 40 days back. Sometimes, the local newspapers will run stories that are talking about how 2012 compared to 2011. You're talking, years old data, and we like to bring, day-old data, or perhaps week-old data, to our listeners so that they can stay ahead of the pack. And many times being ahead of the pack is the secret to succeeding in real estate investing endeavors.
Especially as quickly as the market is moving. It has been for the last 6 months. If you're not out there with the daily updated information, you are not going to be ahead of the curve. And you've got to really check things on a daily basis right now. Then we talk about real estate being a daily occurrence. It is sometimes an hourly occurrence or minute-by-minute occurrence, with the lack of listings out there, the number of pending sales, and the amount of demand, I guess, that's out there for homes here in Central Texas. Guys, once again, the phone number, 836-0590. That's 836-0590. You can also follow us on Twitter at Austin Daily. That's on Twitter at Austin Daily. Kevin, what are you seeing in the market right now? What's your what are your, during the week you got your feet on the street? What are you feeling out there right now?
It's we're into the bandwidth of this sort of difficult market, this challenging market. For several months, we've been saying that buyers are frustrated. We're having the first rounds of closings of the initial frustrated buyers. We had a closing on Friday for a buyer who was looking in the Northwest submarket, this sort of Jollyville Road, Northwest 183, where we have big news of Visa coming in, big news of Apple expansion and employment, just a really, really tight submarket in our local real estate. And I think that they had made offers on 8 houses before they connected on this one, at list price or over. The most being nearly 10% over asking price. Didn't connect on that one. Actually connected on one that was a little bit lower margin than that. But we're starting to see those closings. So where are we big picture? This first round of buyers who have been experiencing difficulty are now closing. These closings, in many ways, are going to set the new comparable values for our summer market.
If they're reported.
If they're reported, right? So we have at least things that are closing at list price or a little bit higher, and this is the first leg up coming into our summer market. So the summer sales will have this first round of closings to fall back on as comparable values. people wonder where do these big price increases in overall markets come from. This has been the leg up I see in this last week. I think the bulk of the closings that are happening are now from the new craziness that was a month before
Right.
to 2 months before.
So you're saying it's only going to get worse?
It's
Or more frustrating, I guess, maybe the key term.
Prices will leg up. That may or may not temper some of the demand, as theoretically an open and free market system would adjust as prices go up.
Right.
It'll slow down the number of buyers. It hasn't happened yet,
But that's if there's a linear amount of buyers in the
That's right.
market, right? But we have an increasing amount of buyers.
Since we have, it seems, unlimited buyers.
Right. Because they just keep moving here, and then the supply can't keep up. So we're at an imbalance, not just with the demand side and the supply side, but it's even making it even worse because the demand is increasing with the number of people moving here,
Right.
and the supply is decreasing comparatively.
Right. It's incredible.
Yeah, and it's we've been spouting this off for about 12 months, right? About 12 months ago, we were kind of called the market. Hey, this is what's about to happen. Watch rental rates. Watch what's going on. And obviously, the last 6 months, we've seen it come to fruition. The last couple of months, we've just been talking about that frustrating number. Let's talk about some frustrating numbers, Kevin. Let's look at the stats, and why don't you explain the stats to our listeners?
Let's do look at the stats. So, did you jot them down?
I did.
Okay.
Yeah.
What we do many times, again, newspaper, local news, they usually report the statistics about the real estate market by taking the data that the Austin Board of Realtors compiles at the end of a month-long period. They'll take 5, 6, 7 days to let any straggling sales from the previous month get entered into the computer. They'll compile that data and crunch on it. For some reason, it still takes them 10 to 14 days to do that crunching.
Right.
And then around the 20th of the following month, they release the previous month's data to the news medias and so on and so forth.
40, 50 days late.
Right. Yeah. So it's 20 days later than the newest info, and it's 50 days later than the oldest info of
Right.
that month-long period.
And when real estate's happening on a daily basis, it's not going to cut it.
Yeah. Averaging.
So they're reporting closed sales, but
they're
that's not
reporting
quite what we do.
closed sales. It's helpful, but this market can shift interest rates. Well, when you get into that, we'll realize that interest rates shift literally on a daily basis. You're having these quarter-point jumps or
Right.
quarter-point dips. In our market, we're seeing with pendings and new listings also goes up and down on a daily or weekly basis. So reporting what happened 45 days ago, it's helpful, but it's not necessarily putting you on the cutting edge of being a savvy buyer or a savvy seller.
Right. It'd be like looking at a stock price from 30 days ago to make a decision today.
Absolutely. So what we do is we look at, so this data is about 20 minutes old. We look at how many actives are on the market right now and how many pendings, how many contracts are there, which would have been recently active homes that are now under contract to sell. So we're able to determine on a daily basis if there's a surge of contract activity or if there's a surge of new listings. And we can use those as our representative supply versus demand to give us a more real-time look at changes in the market.
In a normal Central Texas real estate outlook, what we're about to talk about, what's a good number of pendings and a good number of active listings out there?
If we were, this ratio between those two is what's going to determine whether there's upward price pressure, are prices increasing because there's multiple offers and bids against each other, or are you in a decreasing market? Right. So when we were in 2008, 2009, some of these ratios got up to over 10 or 12 in some of the luxury markets that were oversupplied. But, to answer your question, a neutral spot would be about 5 to 6 months. Neutral meaning that as a seller, you can sell your house. There will be negotiations. Sort of a typical sale will occur. As a buyer, you have things to choose from. There's perhaps
so if there's 50 listings, there should be 10 pendings in a neutral market, right?
Right. And that neutral market's still going to pace probably with inflation what appreciation you can expect. If that ratio drops below that, then we would expect higher appreciation to be occurring. If it goes above that, then you may not be experiencing any appreciation or perhaps even declining prices based on concessions that sellers are having to give to make the
So
property
anything
sell.
below the pending to active ratio below 5 is going to be good. Now let's talk about where we're at right now. So we have 5,657 active listings, which is starting to increase a little bit. We like to see that going into the summer months. However, we have 4,428 pendings in the market. So 5657 actives, 4428 pendings. And remember, what we were talking about is that a 5-to-1 ratio is pretty good. This is a 1 to 1 point. This is a 1 to 1.1 ratio.
Yeah, far less than 2, closer to 1 than it is to 2. It means that you don't have a lot to choose from. This is big time upward price pressure.
And this is the frustration I've been getting, Kevin, is that we have a lot of people who want to go out and buy a home right now. However, it's like they're walking onto a car lot and there's 5 other people in the car lot and there's one car to choose from. They don't care what color it is. They don't care what make it is. They don't care what model it is right now. They have to have a car. So they're choosing a car that sometimes that doesn't really fit their needs, other than it's a place to live, and everybody has to have a place to live.
It's cheaper than a rental car.
It's cheaper than getting a rental car out there. And so what we're seeing a lot of is, when I'm talking to clients, is that, we bought a house. Oh, is it everything you wanted? No, not really, but it is a roof over our head, and it's the only one we could get.
Right.
And without having to pay through the nose on it. So, that's where I think the frustration is with people out there. That there's not a choice for what they can go out and buy.
Yep.
Hey, guys, we're going to take a quick break. When we come back, we're going to delve into this a little bit more. Kevin alluded to interest rates. We're going to talk about how interest rates are going to affect demand here in Central Texas in the coming months. You're listening to The Real Estate Zone. My name's John McClellan.